With all the shortages and supply chain issues out there, times are becoming difficult. We're even looking at a sugar shortage that could disrupt food supply chains. Who'd have thought it could be that bad? So in times like this, we need to be prepared. But what do we do? Well, if you ask anyone what a valuable asset is today, chances are that out of their top 3 answers, one of them might be gold. During an economic crisis, the price of gold increases. And this is mainly because it's a commodity that is not tied to anything. So when there's a financial crisis, people rush to invest in gold. And in turn, the price of gold rises. To learn about how gold might help you today, we must first look about how it's performed in the past. Throughout history, gold has been considered precious and of great value. It has had a long and proud history and unique social status as a precious metal. The history of gold dates as far back as 30 BC. It was the Romans who began issuing gold coins in 50 BC. The cost of gold from 31 BC to 14 AD was set by Roman Emperor Augustus, and he set it from 40 to 42 coins for a pound of gold. Other Roman rulers began to increase the number of coins for a pound of gold, and as they debased the value of gold, it resulted in hyperinflation. The number of coins in the market increased, and therefore the price of gold went up, and the cost of living also went up. Hyperinflation is a monetary inflation that increases at a very, very high rate. Centuries later, in the year 1257, Great Britain set the price of gold at 0.89 pounds per ounce. And each century after that, they raised the price by 1 pound. Because of the tremendous value of gold, many countries in the 1800s began to imprint paper currencies against the British gold standard. But by the year 1900, the US dollar created its own gold standard, as the US owned about 95% of the world's gold reserve. In 1929, the year of the stock market crash, the price of gold was set at $20.63. And though it has experienced some fluctuations, the price of gold continues to rise. By 2019, the price of gold was valued at $1,514, and today, is valued at around $1,850. So what moves the prices of gold? Well, the price of gold is usually determined by a combination of things, of supply, demand, and investor behavior. It's used as a hedge against inflation because the price of gold doesn't change much compared to paper money. With gold, there's more demand than supply, and this means as the more people buy gold, the higher the prices go. The best thing about gold, and I believe the reason why people are drawn to it, is because it retains value. Whether or not the prices of gold fluctuate, the value of gold remains the same. In an article written by these 2 economists, they compared the salary of Roman soldiers from 2,000 years ago to what a modern-day soldier would earn today, based on how much the salaries would be in gold. According to the paper, the Roman soldiers were paid 2.31 ounces of gold per year. So assuming the value of gold was priced at $1,850 per ounce, then a Roman soldier got the equivalent of $3,704 per year. Meanwhile, in modern day, a U.S. Army private receives around $21,966 per year, which means that the U.S. Army private receives around 11 ounces of gold. When compared, they discovered there was an annual investment growth rate of 0.08% over 2,000 years. They concluded that the purchasing power of gold remained constant. This means that if an ounce of gold would buy you a very nice men's suit about 1,000 years ago, today it would probably cost around the same thing. As such, the inflation of gold is extremely slow, or sometimes even non-existent. And this is because the purchasing power over 2,000 years has stayed constant. Therefore, there are many reasons why people buy and use gold, especially during economic crisis. This is because, and unlike our fiat currency, that gold has maintained value over the years. And subsequently, people see gold as a way to maintain their wealth and pass it on from generation to generation. In whatever form it is in, whether it's melted down or in a bar state, it still maintains its value. Quick side note, if you haven't already, you can do us all a favor by giving that like button a pound. Seriously here, we all need to be safe, and what better way than helping out one's fellow man by teaching them how to be secure in the financial crisis. You see, every time you pulverize that like button on this video, YouTube recommends this video to a new person out there who's seeking ways to prep and be safe. Another benefit of gold during an economic crisis is that it is secure. Secure in the sense that when the dollar falls in value against other currencies, people rush to buy gold for security, and this raises the price of gold. Also, as mentioned earlier, gold has served as an excellent hedge against inflation. For years, whenever the stock market plunges, investors have always seen a rise in the price of gold. This happens when fiat currency loses its purchasing power to inflation. So when the prices of things rise, gold rises too. This is why people buy gold during an economic crisis, because gold is seen as a store of value when local currencies lose their value. Interestingly, gold is not just used as a hedge against inflation, it's also useful in deflation. In fact, it actually protects you from deflation. During deflation periods, the prices of things increase while business slows down. During the Depression of the 1930s, the relative purchasing power of gold soared while other prices dropped sharply. People just want to hoard their cash, and what better way to do that than to hold your cash in gold? Also, gold is of tremendous benefit not only in times of financial uncertainties, but of geopolitical uncertainties too. When tensions are high around the world and people have low confidence in government, especially in times of crisis, they choose to invest in gold because of its security. By the way, if you know anybody who needs to learn about the benefits of gold, like a friend or a family member, be sure to hit that like button and share this video with them. And on the flip side of things, I'm going to take a leap and suggest if you don't like the idea of investing in gold, then click that dislike button. So far, gold will continue to stay in demand, and this is another benefit as gold seems to be blended with some other cultures. In places like China, where the gold bar is a traditional form of saving, it's sure to be in constant demand. And in places like India, where gold has many uses, it's sure to retain its value and purchasing power. One last benefit for buying or using gold during an economic crisis is that it's perfect when you sort of want to diversify your investment portfolio. If you want to reduce volatility in your investment portfolio, then you'll combine stocks with gold. In general, if you want to invest, gold isn't necessarily a good investment because its value pretty much stays the same. You can buy and hold stocks for many years to come, and eventually you'll come out ahead. But gold can be good for security in worse than uncertain times. When I say worse than uncertain times, I really mean catastrophic times, when civilization as you know it may be at stake. Because although the cost of gold is uncertain in the short term, over the years or even over thousands of years, it has maintained its value and will do the same for a very long time. I've created some polls on LinkedIn, such as, do you think it's a good idea to buy gold for the coming economic crisis? Yes, no, or giving it some thought. Be sure to subscribe if you enjoy content like this, or if you want to stay updated with the current supply shortages and economic uncertainties. And click that bell icon so you don't miss anything. And I also have this video right here about soaring inflation, which is a previous video in this series. Or if you're watching this in the future, I have this video up here about metal shortages and the soaring cost of cars. In some cases, making used cars worth more than their newer model version. Or if you're not watching this in the future, then it'll be a video that YouTube thinks you should watch. And if you haven't already, make sure you give that like button a pound.